Hey folks, CB3 here with another live update. It is Tuesday, September 3rd. We finished Labor Day. What is going to happen in the week ahead with the big non-farm payroll this Friday? And what is the Fed going to do? Are they going to continue to keep rates where they are? Are they going to cut by 25 basis points? Or are they going to cut by 50? Let's talk about all that. CB3 Live update begins now. Interesting week ahead. We are entering what is, generally speaking, the weakest month of the year for the stock market. That doesn't mean it has to go down, but what it does mean is it's the only month of the 12 that over the last 50 years has produced a negative return, only September. That said, we are heading into the month in pretty good shape in the market. So we have two pieces of news coming up. We have ISM, that's manufacturing, on Tuesday, and ISM Services, Institute of Supply Management is what that stands for, on Thursday, and then Friday, the big number. Okay, so that's the August jobs report. It's always the first Friday of the month, and this month should be really interesting. Why? Because it definitely will influence the Fed and their meeting the following week as to whether they're going to cut rates at all or just 25 basis points or 50 basis points. All right. So that's why this coming Friday's August jobs report is so important. So sentiment is actually cautiously optimistic, and I am too, for September, mainly because I see this race for the presidency really heating up. They flip-flop back and forth. Trump was way ahead of Biden. Now Harris is significantly ahead of Trump, but I don't think that will last. I think it's just going to continue to tighten all the way up to November 5th, and we'll see what happens if that September 10th debate actually happens. But that certainly could be a market mover as well. So the major indices actually posted gains in August, with the Dow and the S&P up for the fourth straight month. Now that's pretty amazing during summer months. So that means May, June, July, and August were all up months for the S&P 500 and the Dow Jones. But kind of high valuations in technology, and that's why programs like our DS, which is mostly Magnificent Seven and AI stocks, still up for the year, but definitely lagging the S&P 500, which is the benchmark. So analysts are remaining bullish. Now, I'm not necessarily in the camp with all of them that we're going to see another 15% from here, but I do think 8 to 10 is likely. And I'm seeing a lot of people saying, yeah, 8 to 10 seems reasonable. Again, it's an election year, no matter who gets in the White House. And if you guys don't believe me, go back and watch my shows where I talk about the number of years where the market goes up after a Democrat's elected president versus a Republican's elected president. It'll surprise you. I'm not going to go into details here, but growth and technology have performed well this year, but have not done so well over the last 6 to 10 weeks. They will benefit from a Fed rate cut if that actually occurs, and I do believe it will. I think that the likely scenario is not 0, it's not 50, but it's likely 25 basis points. They should do 50. In my opinion, they should do 50, but I think it's going to be 25. Defensive sectors like healthcare, utilities, consumer staples, people are still investing in those sectors, and we have some holdings there too. Mostly in the GI program, which is struggling, frankly. GI is having a good year. We're up over 12%, but it's not going to compete with the S&P 500, and it's not designed to. Most of our clients have CG accounts and GI, and now many also have our DS program, which, as I mentioned earlier, is the Magnificent Seven, and then select AI stocks. But the AI theme remains strong, and I expect it to be that well into next year, with Apple coming out with new products. Google certainly continue to innovate with their hardware. So the jobs report on Friday is going to be the most focal point here, because it's going to determine, I think, maybe not determine, but close to determine whether the Fed is going to be able to cut rates the following week. If there's any major developments in the U.S. and China trade negotiations, that certainly will play a role too. And of course, ongoing corporate earnings. Now, we are very near the end of these second quarter earnings. So we're getting ready to head into the fourth quarter, which means we'll be getting third quarter earnings. But right now we're at about 460 of the 500 S&P 500 companies that have reported earnings, and they're above the expectations. So it's a good thing. It really is. Still seeing some volatility though, because of it being September. So don't ever discount September. We do have the lifetime high of the S&P 500 at 4796 from July 22 to act as resistance. Now, that's not the lifetime high. The lifetime high was hit earlier this year, actually in July, just a couple months ago at 5667. But the former high of 4796 will be the first level of resistance that could keep the market from moving up from there. All right, so be prepared for volatility, especially with September's history of being the worst performing month of the year. CG doing very well this year, beating the S&P 500 back up about 850 basis points better than the S&P. GI holding its own. After all, it's only 60% stocks, 40% fixed income and special. And then DS, as I said, the mega cap stocks taking it on the chin this summer because the rest of the sectors are catching up. So that would explain why DS is not having a great third quarter anyway. So there it is. You guys tune in now to the Thursday, September 12th episode of CB3 Live. Be a lot going on that night because then there's only one more show and only one more non-farm payroll before the presidential election. And things could really get rocking if there's a shock in the numbers either way. Stay with us. We appreciate you being here, and we will talk to you next time.